Hello everybody, welcome to TraderMerlin Show. It is your Thursday edition. Thirsty Thursday, the precursor to Friday. Hope you all have fantastic trading day out there. Tom, it's only Thursday, buddy. Your options don't expire yet. We got one more day on those bad boys. We're going to have Tillie, Allison-Harris on the program in just a minute to talk about trading these range-bound markets. For now, I'm going to start you off with my normal to-do. Of course, let me straighten out my camera here. It seems like I'm all crooked. We'll start off with your normal, which is going to be talking about our overall markets. And by the way, big shout-out to everybody who's with us today. Jeff, we got New Jersey in the house. Nice. Ron, Tom, Chris, Ivs, Jorge, and Natalia, good to have you with us. I'm sure more will join us here shortly. All right, let me go to your market update just so we can cover what happened out there today. I'll start things off at the bottom with the Russell 2000. I don't know why this line keeps showing up here after the fact, but the Russell 2000 was your worst performer on the day. 2 days in a row, actually, of being the worst performer. Down to 1417 on the day. It was a slide of 0.49%. So not really that big of a deal, especially from a technical perspective, guys. There isn't much to speak of. You were within this big range that we've established on the Russell and right about in the middle of it. All right, moving on to gold, which had a tiny little bit of a slide, but again, same thing. There's nothing really noteworthy here or anything that would make me excited about gold. It's just been sideways for 6 days, so down 0.33%, but it's really nothing from a technical perspective at 1729. S&P 500. This one's a little better just because it's down below that 3100 mark on the close. It's down 0.25%. Again, it's the same picture as we're going to see on a lot of these indexes, which is price just really in the middle of a big range. And the question is, what do you do when that happens? Next to the 10-year, who cares? We'll go to the NASDAQ 100, which was up today. Of course, it seems like it's always the lead dog to the upside at 99.89.5. It was 0.07%, and just judging by that candle, it does look like you're going to start to challenge those all-time highs yet again here on the NASDAQ. It seems to be just the broken record speech for the NASDAQ 100. Bitcoin comes in second place. Same thing, though. Sideways action for 4 days. Really nothing noteworthy here on Bitcoin. Is up 0.38% to 93.60. A gain of $35 per Bitcoin. And finally, crude oil, which did not follow through on our bearish Harami formation yesterday. Crude oil up 2.09% to 39.01. Again, looks like it's making a run at that $40 mark yet again. We'll see if it can actually break above it. As I mentioned many times, I do see this gap closing and running all the way up to about $48 on crude oil. So we'll have to wait for it to get above that 40 mark for that to happen. All right, talked about the topic du jour. Let me bring up some graphics here. I think I had those all set and ready for you, but make sure I don't hit the wrong buttons because I'm doing so many different things. I end up hitting wrong buttons sometimes. So let me bring this bad boy up. I think I had it. Well, it was there a second ago. I was going to show you the wonderful marketing material I made for Tillie, and I'm going to bring it up for you guys right now. So I'm sorry, just slagging here. Where is it? Oh, riddle me. There it is. It's called Range Bound Trading with Tillie, Allison-Harris. We've got Tillie joining us today. Tillie, how are you doing? You unmute your mic.
Hi.
There you are.
Hello, Marlon. Hi, you guys. Great to be here.
I'm happy to have you with us. We have some exciting things to talk about today. By the way, I like your office setup. It's nice. Is that sponsored by who makes those coffee makers? Those little instant coffee makers?
That would be was it Keurig?
Keurig. It's funny. It's Keurig Dr.
That.
Pepper. Did you know that? It's made by Keurig Dr. Pepper is the name of the company, which I thought was kind of a weird one. You've got a coffee and Dr. Pepper, which is one of my favorite drinks. All right, Tillie, tell me how things are going with you. It's been, a few weeks since we had you on. You're talking about your book. We will probably not talk too much about the book today, but I hope the sales of that are going well. What's new in your world?
Well, so glad to be here, Merlin, and enjoying being in the home office because it's so hot outside. Mm-hmm. And I've been working from home a lot, managing the portfolio. And as you know, we're not really able to go out and do quite as much as we did before. Some things are still, people are a little, I think, cautious. And so been doing some outdoor activities with friends and family and things, but, still at home a lot more than usual. And it's really given me a more opportunity to focus on a lot of things that I like to focus on, but we're always so pulled in daily life, from day to day. So I've had an opportunity to focus more and been using 1-minute charts to time some entries because of this high volatility.
Well, hold on a second. Did you just... There's almost like using curse words and profanity on the show. Did you just say you're using a 1-minute chart, Tillie?
Yes, because the volatility is so high that the ranges are very wide. And to be able to scale into a market, using higher time frame entries, like we'll look at longer term trends and charts, but to be able to calculate risk and be able to scale in, refining that down to very low time frame. And you can only do that if you have enough time at home.
All right. I guess being a mother does have its perks. Talk to me a little bit about range-bound trading. When I talked to you, we were going over kind of what we want to discuss today, and was there something that was in your mind? And I know you look at things from a lot of different perspectives and time frames and asset classes. And the thing you mentioned, which I thought would be kind of a cool topic for the show today, was range-bound trading. What is it about that topic that you wanted to talk about today?
Well, so oftentimes we think of the market as either going up or down, and don't realize that it usually trades in a range before it goes up or down. So, the market, when it moves up or down in a trend, like a bull market or a bear market, it can trend for days and weeks, even months, even years. But inside those trends, there are bases, and those bases are range bound. A lot of order flow coming into the exchange before the market moves up or down. So right now the market is very range bound. It's trading sideways. The S&P only moved from 3086 today, 3086 up to 3105. We're looking at only a 20-point range today. So what that means is that all of the order flow coming into the exchange is those orders to buy and sell are being placed about the same price within a 20-point range, which is very, very narrow. And inside those very small ranges, active traders can buy and sell. But eventually, when all those orders come in, it's like a big floodgate, that the market will trend up or down, and the S&P will either break out above the highs of 3110 or trade down below the lows right now of 3085. That's just the intraday high and low. So a lot of active traders always ask me about, how to trade intraday. And I think the biggest difference in knowing the expectations for the day, are we expecting the market to trend and move 100 points? So if the market trends, it can move 100 points. Like from Monday's open, it trended. So from the Monday open, that low, the market rallied and there was a big move. But today it's very, very narrow range. And so that style of trading is very, very different.
When you talk about range-bound trading, are you looking for ranges for the day? Because, this, I guess, deals with how myopic you want to be. We could be looking at the ranges that have been established over, let's say, the last just 2 weeks even. You have, massive.
It's fractal. So, we can look at it on all time frames. We can look at it on macro time frames, the range of the all-time high down to the pandemic lows. That would be a very macro range. And then as we get down to monthly range and weekly range and daily range and even intraday, we could scale it large or small.
Yeah, I'm trying to draw it out as we speak here because, I think you guys, this is where the challenge becomes. I mean, I think we'd be foolish if we were to say that the market's in a range-bound market, and that's calling it all the way from, and I'm using the continuous contract, the ES, the ADS, saying, well, from 2163 all the way up to 3220. Yeah, I'm pretty sure that an 1,100-point range in the S&P is not considered range-bound. However, that is a range that was established. Now, would we, depending on our trading style, you might want to refine it. And I think, Tillie, this is where I find myself in right now, which is on this chart here, I just drew it on the ES, really looking at 2923 to 3220. And yeah, it's certainly a long range. I mean, it's 300 points. That's a very, very wide range on this bad boy. But, right now we're dead center in it. And as someone who's looking for big swings, am I wrong to say that those would be my parameters for range-bound market at this moment in time?
Correct. That the longer-term trading range, the trend, the market rallied up to 3,200. So looking for a selling opportunity and waiting for the market to get to 3,200, from that point, we might get a bigger move. Right now, the intraday range is very narrow. So, we've always heard buy low and sell high. So relatively speaking, looking at your chart, if we were to plan to possibly buy or buy to cover near 3,000 and sell or sell short at 3,200, those would be those parameters on a higher time frame. But today the market opened and traded within a range that was established on hourly charts. So from today's open, the high of today was established with the 60-minute supply zone at roughly 31, the high there about 3110. And today's open was roughly cash open 8:30 roughly 3087, that range right there. So I'm not being penny perfect, but
Well, you're also
those are
using
the companies
SPX, yeah.
for the day.
Yeah, I'm actually looking at the futures contracts. So numbers are slightly different, but so let's look forward here. And I know that you're not necessarily a day trader, and not that there's anything wrong with that, or right or wrong with that. In looking at that chart, it's kind of interesting. So I put the range bound for today, right? So you got your high and your low for today. Going into tomorrow's session, does today's or the previous day's high and low, does that have any significant meaning for you? Do you look at those numbers as kind of lines on your chart for the next day, acting as support or resistance or supply and demand zones?
Absolutely, Merlin. So I think everyone out there recognizes the opening every day at 8:30 Chicago time, 9:30 East Coast time. That opening price is very important. A lot of orders come in, there's tremendous volatility, and then the market either trends up or down after the open. Typically within the hour, it'll establish that trend, and it will trend towards those orders that are placed on higher time frames. So yeah, sure, there's algorithmic trading, intraday. Big companies out there run a bunch of algorithms, but long-term investors like mutual fund investors, Warren Buffett, Goldman Sachs, these big institutions are investing for the long term, and they're placing orders weeks and months in advance. So when the market opens and those gates open and all those orders come in, the market's going to move, and it will determine a trend or not. Like today, we did not get a trend; it was just range bound. But the opening price will typically become a price point, and then depending on what happens within the first hour, it will begin to trend. And if it begins to trend up above those highs, it'll try and attempt to drift higher to where they're going to sell. Or if it should trend down lower, it will drop until where they want to buy low.
Nice. I was trying to draw along with the viewers here so you could see on the screen. I switched it back to the SPY simply because I wanted to show you the open and closing market trading times as opposed to the futures, which was giving us 24-hour trading. This question from Natalia is kind of interesting. She says, do you establish the range based on U.S. open and close? And this, I think, is really just a matter of personal preference, right? I've heard conflicting things here, Tillie. I guess I could ask, what's your preference on that range? How do you establish your range? And I'll just go through how I do mine and see if it's the same.
Okay, great. Yeah, I think everyone does it a little bit different. So the opening price point, occurs at exactly the open. But that volatility is so crazy that it takes 5, 10, 15 minutes for the, what we call a data point to form. So that reference point might take 5, 10, 15 minutes to form. And the previous day's close can oftentimes be like a magnet for price, but not always. So knowing what the previous day close is important, but there's no exact, cookie cutter as to how the market's going to behave. But those 2 data points surely can't be ignored.
Yeah. I draw a few more things on my screen, and it's not necessarily that they're all going to come to fruition, but it's just me knowing that these levels exist. So what I would do generally is I'll bring up, let's say, I'll bring up the current contract. So you're going to look at the ESU 20 for September's contract here on the S&P. So let me share that full screen with everybody, and we'll just kind of go through a basic of what I do. Not that this is the right way to do it or the wrong way to do it. It's just the way that I do it, right? So right now I'm going to be looking, well, let's do it off of yesterday's close. So I'm going to forget that today opened. We'll fast forward here a little bit so you don't even see really today's open. And this is what I would be faced at going into today's open on our markets. And you can see I've got that low mapped out at 3,064. I'd also put on, which was the high for yesterday, which is going to be right here at 3,130. I also like the closing price, and that's a little bit trickier, but closing price can be right around 3,106. So those numbers to me carry a lot of weight. That's the high from yesterday, and then I also put a little high from the after-hour session, which is there. So you notice I've already got 4 lines on my screen, and there's one more that I want to put, which is the opening price of the morning. So as soon as that 6:30 bell rings, which is right there, I'm going to put a line on that as well, which puts me right here. So basically, as the day progresses, it's not like these things are set in stone, but I have points of reference where it may be heading towards. And you'll notice that the levels that I drew, today's activity, it hit those levels 4 times. It hit 3106. You guys can see that. I'll draw a little circle in there again. 3106, hit it right there. Let me get my snap tool off. All right, yeah, boom, there's one. Boom, hit, well, I'm going to call this a hit a second time. And then he came down to the low, which was dead to almost to the dead penny of 30.86. And then you had it again today as it rallied back up near the close. So you had 4 touches just in the condensed little range. What's interesting about this is, for me, it's no longer going towards the outer bands. It's staying on the inner ones, which tell you that, as Tillie mentioned, things are starting to compress. You don't get very big ranges. And of course, we just have to adjust our trading style there. That's how I draw the lines. And I know that it might be more than what most people are looking at. But, for me, it's just a matter of what works for you. So there you go. That's my 2 cents, Tillie.
Absolutely. So yes, referencing the previous day's high, low, open, close, we call that H-lock. H-lock, kind of unlocks the, way it works, if you will, with all those orders coming in, because you think about it. Previous day's high is a very important data point where a ton of order flow happened, causing the market to reverse. So there's surely some unfilled orders there. And the previous day's low, certainly the market, if it turns around and there's a big turnaround, there's a ton of buy orders coming in there. So retests of those data points are very common. And, it just depends on what the individual is looking for as far as opportunity, as to what kind of move we're going to get off of that. How many unfilled orders are there?
Right.
And like today, that 3107 supply zone that you're referencing was also pretty obvious on a 60-minute chart and a 240-minute chart. So those visual things can be very, very helpful. And, not everyone manages volatility well. In fact, volatility is probably the number one thing that really causes traders and investors to either get really nervous or really excited. So finding what works for an individual, whether it's a specific data point, and we would call that market correlation or confirmation whenever you've got, a data point from a previous day's high or low that's located within an area where there's a bunch of selling or buying on a higher time frame that's that visual. Think about it. On the higher time frames, you can see that over time, those big companies are selling or buying. So
right.
When you then align that with more recent high or low, you then have that confirmation that those orders are now being filled.
When you establish those ranges, obviously when you're looking at something on a 5-minute, I'm not using options. I'm generally going to be just looking at price, buying the underlier. But if we find, these wide ranges, and, let me go back to our chart here just as a reference. I'll bring up the daily .D on the ES just so we can see the bigger picture. The levels that scream out at me as being real big turning points are going to be that 32.20 and the 29.23, right? When you establish big zones like that, how do you approach it? Are you looking more like, okay, I'm going to be buying or selling calls at the 32.20 and selling some puts at the 29.23, or how do you play? Or do you even trade options in that way?
Okay, so are you asking our I'm reading the chat.
You got a lot of lovers out there. You got some groupies.
If we're actually questioning the audience, because I'm a real okay, so just so you guys know, all you guys, I'm reading your chat over there. You guys are funny. So now Merlin and I cannot date because I'm married, but Merlin and I are really, really good friends. And that's so sweet out there. Apparently someone thinks I'm really sweet. That's adorable. So whether we use options, and now you mentioned though also you're measuring market movement. So short-term intraday trading is very, very different than long-term investing. I guess you could say it's, the difference of walking versus running. Things happen quickly intraday, and then investing over time, you just want to really slow it down. So options are great if we have enough time, unless you're like crazy Mensa math person. I know some guys that trade options intraday, and boy, you just got to be really fast up there. Okay. So, most people need a week to 2 weeks to a month or longer. Options have a time element. And I know we've got some guys here in the room and gals that trade options.
Quite a few.
So, and so the time frame is a big deal because the option component is going to lose time value over time, and then volatility can either work in our favor or weigh against us. So finding out what option strategy we're comfortable with, and whenever it comes to longer term investing, I'm very traditional, if you will. I believe that over time the market will go up because of all the Federal Reserve, the way the system has been enacted is to stimulate the economy, stimulate the market. And the big banks have, obviously developed products and ways to make trillions of dollars, and that's going to stimulate the stock market. But what they also developed is ways to make money when the market's not moving. So one component of the option trading is to make money over time. So longer term investing, we may want to buy stocks, but we may not want to buy them right now because they're so near all-time highs. And that's where using an option that will pay us some income, some interest on our cash while we want to invest. So if we want to buy the S&P 500 at, $300 a share, right now it's trading at 311. And then so there's an option contract that will pay us interest to buy. And whenever you think about it, how is it that the market falls, it drops like a rock, and then it just stops? And why would it stop right there? Why would there be so many orders there? Well, oftentimes in the options market, there's a lot of open interest where big companies out there, they're not going to buy at market price. They're not going to buy when the market's high. 311 is relatively high compared to 300. So if there's a lot of open interest and investors are using like put options, which can be a contract that puts us the share. So if we want to buy the stock at 300, the spiders, and that creates a lot of demand in the marketplace. And that's one strategy that I have traded for many, many years. And I recently, since we've been home so much, had the opportunity now to learn a little bit more about how to also use calls in addition. And I know that a lot of people use calls, but they don't use them in combination with puts. So using them as a combination in a strategy when we're already long the stock to create some insurance and also additional premium when we want to sell.
Yeah, I'm actually, I'm bringing it up here just so I was going to try to walk through the viewers through an example of this one, guys. She was mentioning if you wanted to buy the S&P at 300. So let me real quickly just show you what that's like. And this isn't going to be a whole thing on selling puts. I know many of you understand the mechanics there. But let me strip off some of these lines here. And we'll just put one at 300. Actually, let's go to the ETF. We want to SPY. Makes it easier. And I will go out and show you guys 300 on the SPY. So basically, what I just pulled up was an options chain on SPY, and I'll take some of these lines off too, just because those are old. You could sell right now the 300 puts, right? So basically what you were doing would be committing yourself to buy if it falls down to 300. So it's 11 points above right now. Let's see, that's each one of these would be 1, 2, it'd be about almost 4% lower from current price, right? So you're saying in 30 days, I'm willing to commit myself to buy this at 300, but you'd be getting paid $650 right now should you sell those puts. So you're basically collecting premium. If it doesn't get down there, then you get to keep that premium. If it does, you'd be executed the shares at 300 minus your $6 premium, which means you'd actually be long SPY at 293.50 cents. So, to me, options are a great way to get into the market, especially when we looked at something that was so range bound. And maybe the 300 might be too close for some of you. Maybe you look at this range that I'm showing you right now in the S&P, which is, let's call it 296 to 323, and you don't want to own it. Well, great. Then maybe you sell those 295s. And you say, all right, by the end of July, which I don't have the date up here, I think it's July 19th, if you wanted to sell the 295s, you'd be paid $534 right now for the committing yourself to lock that in. And I just think that's a great way to be generating more cash flow. Of course, we could calculate out what the rate of returns are on that one, but all in all, I think it's a great strategy, Tillie. Something that strategic investors and long-term investors should be doing on all their accounts.
Absolutely, and Natalia was mentioning that was something that maybe she hadn't heard of yet. And I know we have a lot of guys that have been around for a long time here at the in your show, Merlin, and some of you guys are like option gurus. And that's fantastic, So a lot of people don't know anything at all about options, and just using them, basic can really make a big difference. And so trading futures is a different animal than trading options, and it just depends on our portfolio, what we're trying to manage. So many people are long stock and don't know how to either manage it with risk management using some type of put option or a collar strategy to protect their long-term investments. And so, getting a little bit more active in the portfolio doing that. But again, talking about range, one reason that people don't want to use the option is because they're not comfortable with the range. Like you mentioned, buying the S&P at 300. Well, like you said, maybe they want to buy at 290 or 280. So really finding out what what risk tolerance one has and how comfortable they are trading. Trading is such a personal thing, and managing our portfolio, and whether we do long-term investing or short-term trading, finding out what strategies we're comfortable with. That's one reason that I love to teach, is because I get to help people find what they're good at. And more importantly, when they really stink at something, they're like, oh my gosh, I'm so bad at that. I hate that. And I'm like, well, you don't have to do that. You don't have to trade on that time frame. You don't have to use that product. So, some of the, like Natalia here, talking about, how to use that option better in her portfolio. There's so many things that we can do. It's pretty amazing.
Let's see. I'll read that one. When Tillie says get paid interest to get the stock at a certain price, is that selling puts? Yes. Yes, that would be selling puts. And I'll give you an example. This is something that I think everybody should be doing. When we look right now at the rates, I actually had a bank statement here I was going to show you guys, but it has my account number on it, and I thought probably not a good idea. But I found an unbelievable deal at Discover Bank. They sent me something. They were like, we'll pay you 2.5% interest for a standard savings account. And I went, wow, 2.5%? This was about 8 months ago. And, right now you can't get 2% in a standard savings account. It's like savings is going to be like 0.01%. I think that's what it's at in my Chase account. So if you think about that 2.5% per year, I made a trade yesterday. I sold the 305 put for SPY. And yesterday we were only trading about 312, but I sold it for Friday. So in 2 days, for committing $30,000, I was going to get $130 in interest. So I would make more interest in that one trade, selling a put on the SPY for 2 days, than I would in an entire year of having over $100,000 in a bank account with Chase earning 0.01%. It's the simple things we need to do to start generating income. And, if it drops below if the SPY drops below 305 yesterday, then I'll own 100 shares of SPY. Not so worried about it. If it happens, I'll manage that trade at that point, but we can get paid interest and dividends. I'm right now looking, probably Monday, you will see me, I'll tell you about the trade. I'll be selling puts on the SPY probably at about the 285 mark, maybe a little bit lower, and collecting about $500 for the month on that $30,000 commitment. So those are things that proactive investor, strategic investor, you need to be doing to generate more rate of return. And they're not overly risky if you know what you're doing. So I went long-winded there, Tillie. Sorry.
Awesome. No, I love, and I'm reading Ruben's comments here, and he's talking about open interest in a supplier demand zone with about 3 months out. And that's what we're referring to, is that is what creates the unfilled orders, if you will, that haven't been filled yet, that creates turning points in real time. So that's awesome. And though I want to take a look here on the S&P 500, I'm looking at the E-mini contract on a 4-hour chart. So Merlin, if you can go to the E-mini chart on a 4-hour time frame.
The current contract, so ESU 20?
I think I have continuous here.
Okay.
It's just, yeah. And I think it'll be a few ticks, deviation on any futures contract, whether you're looking at the September contract because we rolled last week, or right now the continuous contract. And that depends on who your data provider is. Some data providers have accurate continuous data. Other data providers do not. So, whether you use the U contract on the ES or the continuous, within a few ticks there, we're going to be looking about the same thing on a 4-hour chart. Mm-hmm. So off the highs on a 4-hour chart, there is a base drop right about 3,200 you were referencing earlier.
Yep.
And so that's the supply zone that we're keeping our eye on going into next week, the 3,200 area. And that up there right now is kind of like a brick wall. Mm-hmm. Because notice that as the market fell recently off of that area of 3,200, it broke a little bit of the recent lows in that uptrend. And so that low at 3,000 is kind of the range and now of what we're going to keep our eye on. It's a little bit lower, closer to 2,950 is really the low there. So that's the range that we're currently in and will likely be in here going into tomorrow's trading. So tomorrow we'll probably retest either that high or work our way down to that low. So somebody can just go ahead and call it Jim Cramer and have him pump up the market.
Booyah!
That would get us out of this right now, this daily range that we're in, and trade up higher to 32 or back down to 3,000. So I anticipate that the market will try to retest one of those two zones tomorrow.
I would agree with you on that one. I think it will.
Maybe not tomorrow or next week, because I don't have a crystal ball and I don't have enough money to move the market.
Yeah, you do. Sugar mama over there. Hey, Mr. Blotzer, good to have you with us. I got to get you back on the show here probably in a week or two, Tim, if you want to come on. We need to talk rubber duckies. But today we got Tillie. Tillie, you sent me a video last week, and I need everybody's participation on this one because obviously you guys think Tillie's just very attractive. And yes, she is. Not only is she physically attractive, but she's mentally very brilliant. So it's great to have her on the program, and I would like to do more work with her. Tillie sent me a video last week, which basically broke down the different levels in the marketplace and saying, hey, here's where I think this is a significant zone for X, Y, and Z reasons. Here's another one, X, Y, and Z reasons. And kind of, not saying that they're going to turn, but basically just monitoring out spots where, hey, these could be turning points. And I said to her, I said, hey, Tillie, would you want to maybe release that somewhat frequently for our viewers out here? And I don't know what your thoughts are on it, Tillie. I know you're really busy, but you make market calls. You want to do something more frequently?
I think about it, Merlin. I think doing a weekly analysis is a lot of, I love doing that.
It's a lot of work.
I'd love to get you guys, I'm reading out your chat here. I'd love to get your participation in, if you are actively managing your portfolio, how you would use that weekly analysis. So I know Ruben here has been trading options. And so, if I put some zones out there as to how he would use those zones for option trading. And then for someone just managing their long-term portfolio, how it would help them or how they would factor that into their plan. And I think that's, something I do anyway. So it'd be fun to do it here, preferably on Thursdays before happy hour.
All right, guys, if you heard it, you got to encourage her to do this one for us. You got to tell her why you would use it or how you would use it. It is certainly a big commitment. I mean, guys, just doing this show is a major commitment, so I don't have the time to do it all myself. But boy, if I get Tillie to do it, be pretty damn excited to have that happen for you guys. Yeah, the commitment is really, you got to go out there and call those levels and mark them all out and send videos and get it all updated. And, doing it regularly is a pretty tough one. So I'm hoping some of you would like that. I don't see too much enthusiasm out there, Tillie. Got a bunch of people, but it should be flooded with comments right now.
Well, like Natalia, she's in. So Natalia, depending on if you use a monthly contract on the S&P, like I do biweekly and I go out like 2 weeks range. So it really, you want to think about your time frame. If you do monthly option contracts, you really want to go way what's called out of the money. So, on the S&P 500, the further out you go, you want to go, well below $300 a share, because that thing can move, $5 minimum a day up to $7. So, you want to go closer to 280, like Merlin was saying, he was going to sell some, 280 puts?
285 is what I was going to target.
Yeah, the further down we go, the more time we want in our contract. So the closer, like if we sell a 300 put, a weekly contract would be a little bit more reasonable because we could retest 300 in the next week.
Sure.
But that's more of an active trading strategy as far as closer to current price, which is not as far out of the money. The further out we go, closer to 280, 270, that would be more time. So doing 3 or 4 weeks out would just create that passive income, and the market may not go there. What we really want to think about is, do we want to own those shares or do we just want the passive income or both? Because if we get assigned those shares, we then have to determine, how are we going to manage that long position? Are we going to put stops in? Are we just going to try to use options to create some income as a hedge? How much drawdown is there going to be? So kind of thinking through that and be ready that if you do sell those cash secured puts with the intention to buy and you do get assigned those shares, thinking in advance how you want to manage that is so very important because all of a sudden, if you get assigned a bunch of shares of the S&P and you haven't thought that through, and then the market rallies and you're like, oh, should I sell now or should I hold on? And you haven't thought about it, that becomes, that's what we call gambling. Or if it then starts going against us and we didn't factor in and calculate all the drawdown, now we're sitting there trying to think, how far down is it going to go? Where's the next demand zone? Right. And then you get a pandemic scare, and then you're like holding all those shares. So you really got to figure something out there.
Yeah. Oh, okay. Well, we will work on getting Tillie to do that video there. Let's see if we can do it more regularly. I'm going to shift gears here a little bit from the range-bound markets, which I'm a huge fan of range-bound markets, guys. By the way, there's a negative association by novice investors. So you Robinhood guys out there that are always making fun of right now for manipulating the markets and going nuts. sideways markets are actually the best market, in my opinion. When you have a defined wide range and you just basically play those ranges, those are the best, in my opinion. Because, when it's a strong trending market, you're like, well, when do I get on? Do I wait for a pullback? Into where am I waiting for that pullback? And it becomes challenging sometimes in a trend. Yes, the trend is strong and you could just buy at any point and it goes up. But range-bound markets, you've got a floor, you've got a ceiling. It's awesome. I'm a huge fan of that. Here's a question, Tillie, I want to get to. And this is a deviation a little bit from our topic today, but I know it's something that you have experience on. I have my thoughts on it, but I'd like to get your perspective. This is from Marcel. I'll go full screen here and show you guys this question from Marcel that came in yesterday. It said, I've racked up about $200,000 worth of student loans in an effort to get my MBA. Anything you would suggest to help out? So I think we find a lot of people in this predicament right now, which are they've taken on way too much debt. Obviously, we are led to believe that a college education is your gateway, is your absolute path to independence and financial security. That's not exactly true anymore. A lot of times it's people just racking up a lot of debt. So what would be your suggestion or recommendation here for someone who's loaded up with student loan debt?
Okay, yeah, this happens so often. And, it's really, for me personally, I had to work 2 or 3 jobs to get through college, and only because I didn't know enough about borrowing money, how to borrow money correctly, like a mortgage. And so, for someone out there who is doing college planning, there's great plans, and we can talk about that another time, Merlin, college planning. And so, got a little guy, so I'm doing that right now. But think of that debt, that college debt, like a mortgage. And just like a mortgage is the income salary that one has. I know someone who's graduating soon and they're in the field of medicine. So is their income going to be enough to afford that mortgage, if you will? Because when you look at college debt today, that's like the size of a mortgage. So looking at that like a mortgage and thinking, okay, if this is a mortgage and not student debt, because as soon as we say student debt, oh my gosh, you start sweating, you get like all panicky. You're like, oh my God, it's just all this money and it means nothing. And can I ever pay it off? But if you think of it like a mortgage, something that you own, it's debt you own. And then how to think about that and get the lowest interest rate possible. So first of all, looking at what interest rate and what kind of loan it is. And there's different programs today that can consolidate that debt and get the lowest interest rate. So think about if you bought a car and you didn't get a very good interest rate, and then you shopped around, you got a better one. So trying to consolidate that debt and get the lowest interest rate possible. And then again, plan on it like your mortgage. And if you're making set amount of, salary per year, how much more could you pay on that mortgage to pay it off faster? Mm-hmm. And if you just think about it more like that, I think it takes a lot of the, complicatedness out of it.
Yeah, it's the same thing. You and I have done many videos on kind of planning your financial future and those types of things. To me, it's simple. And for Marcel and others out that are in that situation where you have tons of debt, it simply comes down to a plan, right? Just like you have a trading plan. You should have a mapped out plan of what you intend to do. So my recommendation would be to, on a piece of paper, just grab a little white piece of, standard printer paper, 3 of them, and one, you write down your income and all the income you have coming in, all that money, all right? If you're selling illegal drugs, put that down in there too. That's income. Your W-2, whatever it is, royalties. The next one is your expenses, and write down everything that you spend on, and the third one's going to be your debt. On that debt one, that's a little bit different because on your debt, you should write down next to it what interest rate you're paying. Tillie said, and rightfully so, there's a lot of ways to consolidate that debt and maybe go lower. But student loan debt is usually rather cheap, right? So if your student loans are 4%, 5%, something like that, and you have credit card debt that's 20%, don't think about your student loans anymore. Think about your credit card debt and pay off all that high stuff first. Because as soon as you get rid of that interest-bearing heavy debt instruments, then you can focus more money on student loan and pay that down quicker. But yeah, you certainly have to have the amount of income coming in to make all those minimum obligation payments. I'm hoping that the $200,000 was well spent and that MBA becomes something that you use a lot. But I think the average rate now for undergraduates is about 5% for student loans. You're looking at graduates are right around 6.5%, and I think once you get into higher than that, it's about 7%. So those are rather low rates compared to some of the other numbers that might be dragging you down debt-wise. All right, there you go. Yeah, absolutely. And then thinking about it though, and I'm so glad you mentioned, sitting down and looking at all the income and expenses and looking at that, that college loan, that debt. And then yes, if there's a way to get the, refinancing and get it as low as possible, there are some companies out there that can, refinance and get you as low as 3%. So
that's really the goal. And then, though, like you said, though, really take that time to think about other investments. Do you have, your active investment plan? Are you planning to contribute monthly or, quarterly or yearly? What's that look like? And really to sit down and talk about those things, especially if you have a spouse or a girlfriend or someone or a boyfriend, anyone in your life that you might need to talk about at the end of the month of, hey, I didn't get to put that extra money in that extra savings account, so I need to work harder on that, because that's something that so many of us want to do, but it's really hard unless you have enough money coming in to do it. And then sitting down and really making plans. A lot of people, we make those plans all by ourselves. And the one reason I love being here with you guys, whenever we talk about this stuff with other people, we talk about our goals. And like Merlin and I had a little bet that I'd get my book published first. And yeah, so
just rub it in there till salt in the wounds.
Yeah, we enjoy a lot of interaction, healthy competition, if you will. So having someone to kind of, share that with, and hey, I got all this debt to pay off, and making it more of a game almost, if you will. And, seeing that change people's lives is amazing.
Yeah, absolutely. Anytime we can find a way to improve our own situation and bring others up with us is always a rewarding piece. Natalia, you mentioned something interesting. It's a great topic, Tillie. It just moved away because there's so much conversation going on. I hear not all debt is bad. That's absolutely right. So let me just real quick give an example here. Let's say on that third piece of paper, which is our debt, I wrote down 3 different numbers, right? I've got credit card debt of, let's say, $5,000, and that's running at 29%. Credit card companies are usurious. It's unbelievable what they charge, 29%. Then let's say you've got a car loan that's running you 8%, and then you've got $50,000 worth of student loans at 4%. To me, good debt would be taking on another loan at, let's say, 5 or 6 or 7%, and paying off your entire credit card of 29% interest rate. That's good debt, because you're using one number to pay off a much higher number. Generally, good debt is where you're going to take that money and do something that's going to benefit you with it. It's going to grow. You're going to get greater than rate of return than what the money was borrowed at. In this case, if we're paying down a 29% interest credit card, that's good debt to me. Now, of course, we have to start working our way down and get lower and lower and lower to ultimately you have no debt. That's the ultimate goal, which is what everybody should be doing. Anyway, that was my rant and ramble there. You still sound like Susie Orman today, Tillie. You look like Susie Orman. I got the talk track, apparently.
Oh, my goodness. That's too funny. So, Tad, you have my ebook, and I want you to find out how to get the most recent updates, because I have updated the ebook. There's a few updates there. And Merlin and I are going, he doesn't know this yet, so newsflash, Merlin.
Okay.
Merlin and I are going to collaborate on something so that I can do updates on the Fed's actions. And I was reading today about the Fed and what they've done recently. Apparently, they've gotten more involved in corporate debt, and I forget they've done something else to stabilize things more. Yep. So they're more taking a more of a defensive. Oh, and they're not trading ETFs anymore. So the Fed is no longer going to be investing in exchange-traded funds. They're buying more corporate debt. And I forgot I read one of their things. So, yeah, we're going to do something more to provide more of maybe a weekly or biweekly kind of overview of what's happening with the debt market and the Fed. And all in all, the market we can anticipate will continue to be stable or rise unless there is a crisis. And when that crisis happens, it's how the Fed and other big investors manage that debt as to what will happen and how volatile it will be.
All right, as you mentioned that I brought the book up, guys. Tillie recently released this one. It's called The Fed Effect, the Centralized Federal Banking System, and it's a Kindle version, so I think you can get automatic updates on that one because she's changing some things.
I wish you could. So I wish you guys could get automated updates, and I, call the people at Kindle and hey, and you would think it would be automated, but they said, oh no, that if you have the ebook and you want the most recent version, you have to call Kindle. And I'm like, are you kidding me? Isn't it 2020? That's not a show.
Don't we have the technology? And no audiobook yet, Natalia, but I think we're going to get Dr. Woody Johnson to use his soothing voice to read Tillie's book.
Merlin, are you kidding me? So
he's going to read mine. Come on, the guy's got the most soothing voice. It's amazing. Tillie, Chris is adamant. Chris really wants you to come to Houston. When are you going to be in Houston?
I will be in Houston for the 4th of July.
Not teaching, though.
No.
Oh, okay.
Be there enjoying the fireworks and, hanging out, enjoying the sun, getting a suntan. Yes. And so you guys, next week, I will have the paperback version, and I will get a few of them to give away on the show, on Merlin Show.
Wow.
Autographed copies for a few of you. So I'm working on that. The paperback will be available next week.
I'm excited. I can add it to my library over here. I'm looking forward to that one. All right, Tillie, what's any teaching stuff on your schedule? I know that the centers for OTA are slowly coming back online. I know you're still out in Kansas City. You doing any classes? What's going on?
Yes, we do have classes here regularly, and so do teach on location here. Love to teach more online, so I think they're working, on a few things as far as getting all those things worked out. But I wanted to give a shout out to Ruben, and Ruben's going to get a signed copy of this book. Woo-hoo. I know Ruben. You love Ruben.
He'd love it. He'd love to get a copy of that one. All right. Well, cool. Tillie, thank you so much for coming on. I appreciate it. I'm looking forward to, apparently I'm doing some project with you. You have to let me know what that project is.
Yes.
All right. Awesome. Well, thank you. Have a fantastic weekend. If I don't see you before the 4th of July, which is coming up here pretty soon, have a great time in Houston, and look forward to talking to you again soon, Tillie. Thank you so much.
Bye, guys.
Yeah. All right, guys. The lovely and talented Tillie Allison on the program today. Always fun to have her on. I've been trying to get her to do some, like, a little video of markets, right? Just really sit down for 3 minutes and just say, hey, here's what I think about markets. I'm trying to get her to do that more frequently. It'd be great if I can get her to do it. So I'm hoping that your support and encouragement was going to help push her over the edge, and we can do that. Can we attend these classes online? I'm not sure, Chris. I don't know if she does online or just physical up there in Kansas City. She's pretty much in Kansas City, so she's not going to be teaching in Houston right now. Kansas City, I think, is her only physical stop for classes, but maybe she's doing some online stuff. Not 100% sure there. Maybe Natalia. We'll see. We'll probably see if we can do something that will allow you guys to get a copy of her book. I know that she's great. She wasn't that pretty, honestly. Oh, you're so nice, Cyrix. You're a wonderful man there. Anyway, I think she's absolutely lovely. So, all right. Again, her book was titled, there it is there, The Fed Effect, the Centralized Federal Reserve Banking System. You can get a copy of that over on Amazon. And, of course, if you're in the Kansas City area, you know Tillie Allison very well. She will be teaching there. Not sure if she'll be teaching anywhere else right now. All right, yeah, hit that like button, Patrick says. I agree. Hit that like button. I enjoyed having her on the program today, so we'll hopefully get her on more often. Let me go through and real quickly give you guys some updates as far as what is going to be happening out there for tomorrow's session. Earnings-wise, there's really nothing that's noteworthy. It's really all around the economic calendar. And today, let me bring up a little bit of economic stuff for today, because I got to give a little love to the neighbors to the north, because there was some interesting stuff happening in today's market. Here's what happened today. Full screen, if you wouldn't mind, Merlin. You notice I've got a couple things highlighted in green and one in red. I'll do them one by one here just to make it easy. Let's go back to the bad one. The unemployment claims were much higher than expected today. We've seen a consistent drop in the unemployment claims, and then today we popped back up. So that's a little bit of people getting nervous out there with regards to the unemployment claims. But it's not all bad. The manufacturing numbers, we saw on Monday a turnaround in the Empire State Manufacturing Index. Today, the Philly Fed Manufacturing Index came out positive by 27.5. That's a phenomenal swing from negative 23 to positive 27. That means that you're seeing big expansion there in the Philly area with regards to manufacturing. So that's a great sign for economies and our markets. On the top there, you see ADP non-farm employment change for Canada. They experienced, the previous number was a pretty big decline of 2.3 million. Now it's an increase of 208,000. So all in all, a great move to the upside with regards to ADP non-farm employment change in Canada. That's what happened today. Let's show you what's going to happen tomorrow. This is for the 19th. Not a lot. It's usually rather slow. Canada is coming out with their retail sales numbers. It'll be curious to see if this number isn't a big shock as well. Remember, you guys saw our numbers go from negative 13. They're expecting it to be like negative 7. We came out at a positive number. So retail sales right now for Canada are expected to be ugly, but the trend seems to be a big surprise on retail sales numbers. So that could be great if you're trading the Canadian dollar. Other than that, you do have Chairman Powell speaking at 10 a.m. tomorrow. Other than that, not too much else going with regards to our markets on Friday. That's it for today. I will have no guest tomorrow, so I've got a bunch of questions I didn't get a chance to get to. If you guys still have questions or comments, put them down below the video on our YouTube page. Of course, always click that like button. Of course, you know I love when you click the like button. It helps the ratings, helps the reviews. Of course, there's many people who were left behind in Power Trading Radio because unlike some people, I didn't steal an entire database and attack a database. I did this all from scratch. So a lot of people who are missing PTR just don't even know it's there. So if you guys have someone who used to watch Power Trading Radio and likes me for whatever reason or likes the content, share that with them and hopefully we can get more people to watch this program. That will do it for today, everybody. I will run through these comments here at the end. I know I got a lot of stuff to read through, but hope you guys had a great trading session. Hope you enjoyed this show as well as Tillie, Allison. Until then, happy trading, everybody. I will see you tomorrow.